Hello economics students. In this video we're going to start talking about budgetary policy, and basically we're going to outline the sources of government revenue. Before we do that, I want to talk a little bit about this idea of the budget. And it helps to think about the government's budget just like your household budget, maybe your parents' or your own budget. Just like your household budget would have some revenue, some money coming into your bank account, the government has money coming into its bank account too. It's mainly from taxation. And just like your household would spend money on groceries and bills and whatever, the government spends money too. So that's money out of their bank account. Now, at the end of the period, for the federal budget, it's the end of the financial year, but maybe it's the end of the week for your household budget. You either have a surplus of money where you have some money left over, where your revenues are greater than your outlays and you have a little bit of money left over. We call that a surplus. The government can have a surplus. Or you have a deficit, which is happening to me a lot at the moment, where you're actually spending more money and your outlays are greater than your revenues or your money in, which means you have a deficit. It's the same for the government, and the government runs plenty of deficits. So let's get into the sources of government revenue, and there's a bit in this dot point. The first one is called a direct tax, and this is by far where the government sources the majority of its revenue, where it gets most of its income from. The way to think about this is a direct tax is always on income or profits. In Australia, if you earn an income or you make profits as a business, you must pay tax. When we're comparing direct taxes to indirect taxes, a little trick is to think that direct taxes are paid straight to the government. If you're earning income via an employer, they're going to pay the tax directly to the ATO. You don't take the money and then pay it yourself. And the same goes for a corporation. So some examples of direct taxes are income tax. Obviously, households earn income, they pay that to the government. Corporation tax or corporate tax on profits, and the Medicare levy, which is levied on income but is used to help fund Australia's amazing medical system. The other type of tax is, or the other source of revenue, I should say, and a type of tax is what we call an indirect tax. And this is levied on the production or the consumption of goods and services. So it's not on income or profits. And you can sort of think about this like the government interventions that we looked at in Unit 3, Outcome 1, to correct negative externalities. Some good examples of indirect taxes are the GST, the Goods and Services Tax. Every time you spend money in Australia, you pay a tax, but you don't collect that yourself and then take it to the ATO. The producer collects it on your behalf. All our excise taxes, which are designed to decrease negative externalities like tobacco tax, petrol tax, alcohol tax, all of those things are also sources of revenue for the government. And from our last outcome, tariffs on imports are also a source of revenue for the government. Indirect taxes make up much less of the government's revenue. Okay, I'll come back to that because I wanted to talk about the last source of revenue, which is either the sale of government assets or revenue from government businesses. And our business management students, these are our GBEs. The government used to own this business Telstra. I'm sure you've heard of it. It owns a lot of infrastructure in Australia. And Medibank, a private health insurer, or it used to be a public health insurer, they sold these businesses to the private sector and they earned a lot of money for doing that. They earned a lot of money for doing that, and that was a revenue for the government. The other thing is that they still own some businesses, the NBN Co. If that makes any money, that's a revenue for the government, much less than taxes. Now we need to talk about types of taxes for a moment. So we're going to break down types of taxes into three types. The first one is called a progressive tax. When you progress, you move forward. It's the type of tax where the more you earn, the more you pay as a percentage of your income in tax to the government. So the definitions are here, but let me give you an example. The best example is income tax in Australia. Because a household who earns $100,000 in Australia, I'm just going to tell you the numbers, it pays about $25,000 in tax to the government. Now that works out to be, nice and simple, 25% of your income. But if you earn more, let's say you earn $1 million, which is crazy, but it works for my maths. If you earn $1 million in Australia, you'd pay something like $400,000 in tax. Now you can work that out. That's about 40% tax. So the more you earn, the higher the tax you pay as a percentage of your income. So more of the burden falls on the higher income earners, which I think is a good thing. The opposite of a progressive tax, when we regress, when we go backwards, is called a regressive tax. And this is where the more you earn, the less you pay as a percentage of your income. And you can check the definitions here. A good example of a regressive tax, or the only example, is the GST. Now, if we take that $100,000 family that earned $100,000 in a year and they spent all that money into the economy, so they spent $100,000, they will pay the 10% GST, which is $10,000 or 10%. Now, if we took the family that earned $1 million but spent the same amount, so still only spent that $100,000, well, they will also pay $10,000, but $10,000 as a percentage of $1 million is only 1%. So in this case, the GST is a regressive tax because the more you earn, the less you pay in percentage terms. Now, the final tax is called a proportional tax. It's also known as a flat tax, and that just means that regardless of how much you earn, your tax rate, the percentage tax rate that you pay to the government, is the same. In Australia, the best example is a company tax rate. So whether you earn $1 profit or you earn $1 billion of profit, both these companies, they pay a tax rate of 27.5% in Australia. Okay, a flat tax rate. The percentage doesn't change as the profit changes. All right, so this video was all about where the government sources its revenues from. In the next video, we'll go into expenses, what they spend it on. Before I go, just wanted to shout out to everyone at Werribee Secondary College. Someone hand-delivered me a thank you letter, which I thought was beautiful. I hope you're enjoying economics. And anyone else out there, if you've got any questions, let me know. Bye for now.